going to be just covering the overall state of the markets. So Frost & Sullivan looked at this analysis at the beginning of the year, and a lot has happened that has made the markets very volatile in recent times, in recent years. So 2020, 21, obviously, we all know we had COVID-19, and that was one of the dominant influences in the market. Overall, 2021 was a slightly more encouraging year. The S&P 500 was up 27%, Dow Jones Industrial Average was up almost 9%, and NASDAQ was up more than 21%. So these were all positive signs. So Jeff, when you look at the view of today's market, obviously things have changed a little bit since the report came out. What does that mean? Where are we now, and what does it mean for your customers?
Yeah, January 2022 feels like a long time ago, doesn't it? At the beginning of the year, equities markets were hitting all-time highs, but you're already seeing headwinds kind of develop in the economy. U.S. GDP was, inflation was up above 7%. You knew there were interest rate hikes looming, and that's when the VIX first moved above 30. Right? So you're seeing all this froth and churn in the economy, and I think we've certainly seen that play out and accelerated by the events that started in February. So down markets are not necessarily a problem for financial markets participants, right? It often doesn't matter if the market's moving up and down, as long as they're moving. And high volatility presents opportunities, oftentimes, for the participants in the market community. The question is, though, when that volatility is present, is your infrastructure prepared to handle it, right? And that's what we're here to talk about today. High volatility travels with high market data volumes, high traffic volumes on your network, and you have to ask questions like, do I have enough capacity to handle these bursts of market data? Do I have full resiliency built into my networking and my infrastructure and my equipment? It's important that your infrastructure works well during normal times, but it's critical that it works during these black swan events and these outlier events, because that's often when the opportunities that are most lucrative present themselves.
Yeah, Eleni, I guess resilience is key.
Yeah, definitely. I think yes to everything that Jeff said, and ultimately, a secure foundation is really key for your infrastructure. So having partners that have got really tried and tested infrastructure that has been through the shocks, that has the scalability that you need to make sure the throughput is there when you need it at every layer of the stack, basically. And yeah, the flip side being obviously that there are opportunities, as Jeff mentioned, and so having the capability with your partners to act on those opportunities is important as well, right? So how do you pivot if certain markets are down, but you need to get into new markets, new asset classes? How quickly can you do that? And that's where partners can really help you get there. If they're there in market already, they can really speed your time to market, which is ultimately time to making money, right? So that's where these kind of managed service providers and a company like Equinix with a global scale, they really help with that reactivity to the market as well as the resilience.
Yeah, and to all of your points, things like the Nord Stream attack a couple of weeks ago, I guess only adds to the market's anxiety, and we've got geopolitical unrest with the situation in Ukraine and Russia affecting access to energy, and winter coming up. So a lot of things going on. So I guess all the more important that everybody's clear about their planning and how they plan to respond. If we can just go to the next slide, I think one of the interesting things that we saw in the report is that, Frost & Sullivan have identified global traders at this kind of crossroads. So what's your take on that, Eleni? What's your thoughts on that observation?
Yeah, well, I think one of the key things here is that market data is exploding. In volatile markets, there's just a huge uptick in the volume of data points that needs to be ingested. We're also seeing, exchanges are creating new access points. We're seeing matching engines move, whether it be on the stock exchange group or Euronext actually changing countries, which is a really big move for the market. And I think all of those movements, they have real practical implications, right, for your trading infrastructure. And the frequency of these market changes can be a real tax on the teams that are running your infrastructure. It's complex, it's really time consuming, it can be really costly as well to react to the market changes, particularly if you're looking at global markets, if you're a global player. And the risk is, of course, if you're not on top of that, then it can affect your trading strategies. If you're not, if you haven't got the optimized latency, and if you're not staying on top of all the exchange updates, etc. So there's a real translation here in terms of the risks associated with not reacting and your bottom line. So again, finding specialists that do that as their day job, that's the core competence. They just make sure that the markets are connected, the markets are up, there's enough throughput for you to access where you need to access when you need it. That's the real criticality. And then your teams can focus on the value creation, right, on the strategies and the deciding where the money goes.
Jeff, I guess this is a real challenge for the CIO, isn't it? This whole issue around market data.
Yeah, I mean, CIOs are being asked to spin multiple plates at once here, right? On one hand, you've got the growth in data volumes, and you have to stay ahead of that. And that speaks to capacity and how your network infrastructure is designed, right? Do you have pipes that are big enough? Do you have resilient exchange handoffs going into redundant switches? Do you have resilient network paths with A and B feed separation, stuff like that? Eleni also mentioned these exchange data center moves that are going on, such as LSE and Euronext Bergamo, right? And Bergamo, excuse me, sorry. These are unplanned and external factors that kind of force CIOs to have to adapt and react, and it's unplanned and unbudgeted work oftentimes, and especially in times like these where we're seeing constraints in the supply chain that are significantly impacting the ability to get hardware. We're looking at lead times on high-end switching equipment that's now eclipsing a year. So if you rely on your do-it-yourself approach, you could be caught flat-footed when volumes spike or when a data center or exchange announces a move and you have to prepare to handle it. This impacts the balance sheet because you have additional costs you may not have taken into account in a time of rising financing costs and choppy earnings growth. And, it is, as Eleni pointed out, it's a real cost burden. I think that's why, in the Frost and Sullivan report, you notice that they found that 31% of CIOs say they're going to shift their operations to a managed service provider by 2025, which I think reflects the current challenges and uncertainties.